Congratulations on taking the steps to better understand your benefits and prepare for a successful retirement. Our video presentations are all about education. The topics we cover are a deep dive into your employee benefits. Each episode is about one particular component or subcomponent within your benefits package. We know that your time is valuable, so we limit each episode to one topic. We explain things to you in a manner in which it is easiest to understand, and we try to limit the amount of industry jargon as much as possible. Our goal is to help take the mystery and guesswork out of your benefits. Now, before we get started with today's educational video, I would like to mention our partners that are geared towards helping the federal employee. For over 20 years, Purchasing Power has served as a voluntary benefit that gives eligible, non-active duty, federal civilian employees, federal civilian retirees, and retired military members access to tens of thousands of household and lifestyle products that can be purchased today and paid over time through payroll allotment. Purchasing Power is a stress-reducing problem solver for federal employees. A 2019 financial wellness survey showed that nearly 50% of employees have trouble meeting their monthly expenses. A 2019 Harris poll showed that 83% of employees experienced an unexpected expense in the past 12 months due to vehicle repairs, medical issues, travel, or home repairs. Purchasing Power has helped over 150,000 federal employees acquire the products they need while spending within their budget and avoiding more costly alternatives that may further harm their financial health. What do employees buy with Purchasing Power? Well, electronics, computers, furniture, televisions, appliances, and much more. Want to learn more? Go to FEBA.purchasingpower.com. Again, that's FEBA.purchasingpower.com. Now, as a new customer, you will receive a 20% discount on your first order. Federal Employee Benefit Advisors was established in 2007 to provide educational materials and benefit counseling. Their advisors specialize in providing extensive benefit counseling and retirement planning for federal employees. You can obtain a complimentary copy of their benefit education book, The Informed Fed, by simply going to their website, FEBadvisors.com. That's FEBadvisors.com. Click on the complimentary book tab and complete the request form. There is no cost or obligation associated with this. And if you would, please share, subscribe, and like our channel so we can help as many federal employees as possible. Thank you for your time, and now here is today's educational video. Now, this segment is going to be about the good, the bad, and the FEGLI. FEGLI, if you didn't know, stands for Federal Employee Group Life Insurance. Now, Federal Employee Group Life Insurance, first and foremost, is designed to go away. All right, it is not permanent life insurance. Now, why is that? Well, that's because everyone is approved. Once you sign on the dotted line and become a federal employee with whatever agency that you work for, you're going to make decisions on your Federal Employee Group Life Insurance, the options that you're going to choose, whether multiples of option B, if you're a non-postal employee, whether or not you're going to retain basic. All of those decisions are going to be made. But the bottom line is you're automatically approved. So with that type of life insurance, what happens is the cost goes up over time and the benefits decrease over time. Not a good combination when it comes to life insurance. And one of the biggest problems is most federal employees don't discover this problem until they're late into their career, because the costs of Federal Employee Group Life Insurance for a younger federal employee are very cost effective. But as time goes on, again, it becomes less cost effective. And the fact of the matter is, it becomes unaffordable eventually. Now, with that said, most federal employees cancel it when it's most needed. All right. So usually about the age of 50 to 55 beyond is when those costs really start to skyrocket. And the federal employee is approaching retirement and they're looking at their budget, and then they cancel it because they realize they cannot afford it in retirement. Is it important to have life insurance with living benefits, which we'll talk about a little bit later? But is it important to have it in retirement? Well, you have to ultimately make that decision. But an advisor that is life licensed, and the advisor that is sponsoring this segment is life licensed, they can put together illustrations and show you the benefits of having a solid life insurance policy into retirement. Now, federal employee group life insurance has no cash value and it has no living benefits. A solid commercial life insurance policy is going to have cash value that you can use tax-free in retirement. And again, it is going to have living benefits for chronic, critical, and terminal illness to help you with those catastrophic events should they occur. Now, federal employee group life insurance can be canceled or reduced at any time. A lot of federal employees have a misunderstanding about what they can do with federal employee group life insurance if they're not in open season. You do not have to wait until open season to cancel or reduce federal employee group life insurance. You can do that at any time. And it's very simple. Again, an advisor can help you with the paperwork on that to reduce or cancel your federal employee group life insurance. You must be in open season to add or increase federal employee group life insurance if it is offered. But to cancel it, you can do that anytime. And very easy to replace federal employee group life insurance with a superior policy. Now, let's look at some numbers concerning federal employee group life insurance and help you understand how the premiums are calculated and the costs and so forth. So let's start with the basic option, basic life insurance. Now, if you're a postal employee, you do not pay for basic life insurance unless you retire prior to age 65 and choose to continue it. All other federal employees pay for basic life insurance as long as they retain it. Now, here's how the death benefit is calculated for federal employee group life insurance. You look at your annual salary, you round that up to the nearest $1,000 increment and add $2,000 to that number. So here's an example. Let's say we have a federal employee with a salary, an annual salary of $74,285 per year. We would round that figure up to $75,000. We would then add $2,000 to that figure. So in our example, this federal employee for basic life insurance, the death benefit is $77,000. Now, again, postal employees pay nothing unless they retire prior to age 65, but all other employees pay 15 cents per thousand per pay period. So if we take our death benefit of $77,000 at 15 cents per thousand, that's $11.55 per pay period for that basic option. Now, the cost of that does not go up unless your salary increases or they change the premium amount, if they increase the cost of the premiums. Now, let's talk about the reductions. Now, when you complete your retirement paperwork, you're going to make a declaration concerning your federal employee group life insurance. Now, if you don't have any federal employee group life insurance, then you're not going to utilize that form, obviously. But if you do have any of the federal employee group life insurance, you will need to declare what you're going to do with that going into retirement. With basic life insurance, you're going to declare whether or not, number one, if you're going to keep it. If you are going to keep it, you're going to choose either a 75% reduction, a 50% reduction, or a 0% reduction. Well, what does that mean? That means that on the 75% reduction, you will lose 75% of the death benefit over a period of time. And you will continue to pay for that until you turn age 65. If you choose the 50% reduction, then you will lose 50% of the death benefit and you will pay for it as long as you retain it. The 0% reduction, you will not lose any of the death benefit, and you will pay for it for as long as you retain it. Now, let's look at a FEGLI option B example. Now, FEGLI option B is the option that shows the most cost escalation for a federal employee. So let's use an example here. Let's start with an age, say 45 years old. So we have a federal employee here that's 45 years old, and their annual salary is $75,000 per year. And they have chosen to max out their option B with what we would call B times 5. Now you can have B times 1, 2, 3, 4, or 5. In this example, we're going to use B times 5. This would provide this federal employee with a $375,000 death benefit, 75,000 times 5. Now, you will notice at age 45, the current cost, it's very economical. As I had mentioned earlier, this is something that creeps up on the federal employee. And keep in mind that OPM is not going to counsel you on this. They're not going to talk with you at the very beginning of your career when you're younger, in most cases, when you start your career. Then they're not going to counsel on the fact that, hey, this insurance is very cost effective now because you're in your 20s, your 30s, your 40s, or whatever it may be. But when you get on into your career, these costs are going to escalate dramatically. They're not going to tell you that. And again, that's why it's very important to have an advisor in your corner when it comes to making decisions with your benefits and your finances. Okay? So, but as we see as time goes on, age 50, that cost goes from $65 per month to $89.25 per month. Then we see at 55, it goes from $89.25 to $162.38. So as you can see, this really starts to accelerate as the federal employee ages. Age 60, it goes from $162.38 to $357.38. And as you can see, it maxes out at $2,145 per month. Again, the federal employee is going to cancel that. Now, if you have FEGLI option B, you need to strongly consider looking at other options to replace that. Besides all of the other FEGLI options, but FEGLI option B is the #1 culprit in cost escalation. Now let's look at replacement options. With commercially available life insurance policies, it's usually broken down into 3 primary categories: a term life policy, a whole life policy, or an IUL/UL policy. So the term policy is named a term because it terminates. It is not permanent life insurance. And it is usually going to be issued on, say, a 10, 15, 20, 25, or 30-year term. And once that term is up, then the policy is essentially canceled. Now, there are options to continue it, but in most cases, you can't afford it after that point because the costs do escalate on a term policy because it is not permanent life insurance. A whole life policy is a permanent life insurance policy. Now, what are the additional benefits? Well, besides the fact that it is permanent, and in the vast majority of cases, your premium is not going to go up, you're going to have cash value in that policy. And that cash value can be utilized tax-free in retirement. Okay, so life insurance, cash value life insurance is used to provide tax-free income in retirement. Now, most whole life policies are going to have a set fixed rate in that policy that doesn't change, or if it does, it changes very little. Okay, now, most whole life policies are what are known as fully underwritten policies. All right, there are simplified issue policies that don't require as much medical exam or medical questions and so forth. And again, a licensed advisor can help you with all that, help you understand all the different life insurance policies available, run illustrations for you to determine what is going to be in your best interest. Now, the UL, the universal life or indexed universal life, is very similar to a whole life policy in that it is permanent. However, most UL and IUL policies have a much richer living benefit schedule. In other words, that type of policy is normally going to have a chronic and critical illness rider. Most whole life policies don't have that. Now, how do you choose between the two? Well, if your primary goal is cash accumulation, the whole life, in a lot of cases, is the way to go. But if you want to accumulate cash and have those living benefits available, then the UL or the IUL is many times the way you will go. And again, the advisor can help you make all of those decisions and make sense of that for you. Now, we do thank you for taking the time to view this segment. We hope it has been beneficial to you. And again, connect with the advisor that's sponsoring this. They're going to help you prepare for a successful retirement. They're going to help you better understand your benefits, and they can provide you with complementary benefits analysis. They can provide you with a lot of material to educate you and help you provide a retirement plan that's going to be in your best interest. Thank you very much.